This is Facebook Live chat on Houston area employment numbers for April 2017. It's May 19th. We're here with Parker Harvey, Senior Economist with Workforce Solutions. So Parker, tell me a little bit about what the numbers showed this month.
Well, this month was a great month for job growth. We added 18,700 jobs, and Aprils are typically months for job growth here in Houston, but this month was exceptional. If you think back to what we did in 2016, this is the same number of jobs. So basically we added in 1 month the same number of jobs we added in all of 2016. So again, very good month for job growth.
In which sectors of the economy did we see the highest level of job growth?
Professional and business services led the way with 7,000 jobs, and that's really encouraging to see. And most of that job growth came from employment services, which essentially is temp help services. And that typically is sort of a prelude to more permanent hiring down the road. So very, very encouraging to see. And it definitely reinforces the notion that Houston's economy, or at least the job market, has been in a solid recovery now for approaching very quickly a year.
Okay.
Thank you so much.
What do you expect? I guess what's kind of the big takeaway from this? That we're on a good trajectory, or do you see any bumps on the horizon?
Well, we are in a good trajectory here. Everything seems to have more or less bottomed out sometime in the latter part of last year, let's say maybe last summer, even in some cases earlier than that. So it does look as though the worst is behind us. We do have a couple of headwinds in front of us, particularly construction. Construction job growth continues to slow down month over month and over the year as well. And that really has to do with those petrochemical construction projects on the east side continuing to wind down. And so we can still expect that to be the biggest headwind for Houston's job market for the foreseeable future.
Speaking of construction, what are you seeing on like home construction or private construction, such as homes and whatnot around Houston?
My understanding is single family continues to do exceptionally well. Multifamily, again, we've still got a lot of units that are going to be coming on the market here in this year. All that's supposed to again slow down in 2018. We've been saying that for quite a while, but it seems as though builders who got projects started towards the end of the last cycle here are still working on those projects. So again, single family, doing well. Commercial office, we're pretty much built out there as well. We're not going to need a whole lot more for a while. We've got several years before we can absorb all that space.
Okay. Manufacturing was another positive growth segment, industry sector this month. What are we seeing in that?
Well, this month it was driven by durable goods, which is, for the layperson out there, really what that refers to are the machine shops, the equipment makers, basically all the people who contribute the parts and equipment for oil and gas exploration and production. So the recovery there has actually been stronger than it has been for even in traditional oil and gas. And it seems to suggest that the rig count that we've seen go up exponentially almost since, say, last summer. It appears that their parts and equipment are being brought out of storage to repair things that have been mothballed for the last couple of years. So it's really encouraging. We are still quite a bit of ways below the absolute number of jobs that we had by about, say, 45,000 or so, let's say maybe even 35. But we have recovered about 12 since bottoming out last November. So things are looking up. We have a long way to go, but manufacturing is doing well.
All right. But you said mining and logging still hasn't quite recovered from its...
It's uneven. So you have to understand within mining and logging, you've got two things. You've got your principal sort of oil and gas exploration production companies, and then you have the oil field services, which oftentimes go out and do the work on behalf of those companies. So the direct oil and gas exploration production companies, those continue to show quite a bit of weakness, even some job loss. However, it's the support services for oil and gas that actually has seen the sharpest recovery, and that portion of it's doing well. So it does suggest that the industry is on the mend.
Okay. Oil prices have been fairly steady over the last several months within a short range.
Sure.
Does that seem to indicate that we could be, in the hiring in the temp and employment services industry, could that be a sign that we might be seeing an upward trend going into the latter part of the year?
Possibly. It really just depends on what the price of oil does, but it does seem to suggest that companies have looked at OPEC's agreements between last fall and last winter and this spring here, and perhaps they're trying to get ahead of that. So, again, positive sign, but we'll have to wait and see. If oil can't get above, let's say, $50, $55 a barrel consistently, though, we may see some of the strength that we're seeing right now sort of attenuated a bit going forward, but hopefully that won't be the case.
Okay. And I think of one final question that I might have. Last month was a slight revision upward. Is that correct on the overall?
Correct. Yeah, I believe by about 700 jobs or so.
Okay. And so, is that generally good news when it's, obviously it is good news because more jobs are added than they originally thought, but we've kind of seen the same upward revision at the same time that we're also seeing the good job growth. Is that, what does that say? Does it say anything?
I'm not really sure, because keep in mind, all these data ultimately really and truly are preliminary. They'll be revised, they get revised each month, and they will get revised each year as well. So the upward revisions, I wouldn't put a whole lot of stock in them, although it's encouraging to see. If it seems to reinforce a trend that we've been seeing for a while, I think it's probably pretty reliable, but it's really, you have to take it with a grain of salt.
Okay. Retail sales was another good month of employment. Trade, transportation, utilities is the overall sector, but retail had about 4,200 jobs, 4,200 to 4,700 jobs added.
The overall sector, I think, was about 4,700, if I'm not mistaken.
Okay.
Yeah, 14.
What is that? Is that good news for the economic health? Does that mean more people are spending money so that they need more people to work the retail stores? Yeah, it does seem to suggest that discretionary spending is still holding up pretty well here. Keep in mind, we've also had explosive population growth over the last decade, so a lot of that has to do with just retail catching up to the population growth that we've seen. So I would expect that to continue for a bit longer, but eventually that's going to have to slow down a bit. We can't have year over year stellar growth in something forever. It has to kind of slow down a bit, but for the time being, retail continues to do well. Okay. We're compared to last year. What are we looking at?
In terms of?
Just in terms of the overall health of the Houston area economy.
Gosh, well, 2016 was actually probably our roughest year in this. Well, I take that back. 2015, we actually pretty much added no jobs. 2016, we came in at around almost 19,000 jobs or so. So to put that in perspective here, we are on track. I think the current forecast out there is somewhere around the neighborhood of around 35,000 jobs this year. So at the pace we're going, we're on track to be able to hit that number, I think.
All right. This has been your monthly Facebook chat.